Major cement company stocks have surged recently on the bank of company-specific announcements like capacity expansions and acquisitions. But in addition to these stand three key structural or macro trends in favor for the sector's earnings in Q3. First, we have the uptick in cement prices. Now, despite a 1.4% month-on-month dip in November, the average price of a 50 kg cement bag in India has risen 4% quarter-on-quarter, and this is in October and November in Q3 FY24 when you compare it to Q2. Now, this price increase is expected to contribute to higher revenues. But when you look at it from a region-wise perspective, the southern region has experienced the highest growth at 6.8%, followed by the east at 5.9%, then the north at 4.6%, while the west and central have had lower growth at 2 and 0.2%. Another positive factor is the decline in input costs. Now, raw materials like crude, petcoke, coal and diesel stand very crucial for the cement companies and constitute to 25 to 30% of their total costs. While diesel prices have been steady, Brent prices have been down 16% since October 1st. Domestic petcoke prices in December have decreased 7% month-on-month and 24% year-on-year, while the imported coal prices in November have decreased 46% year-on-year. Additionally, in Q2 FY24, logistic and power and fuel costs decreased across major companies as they focused on optimizing key expenses. And now this is a trend you can actually observe since Q4 of FY23, with Dalmia Bharat having the highest decline in the prices, followed by an Ultratech and a JK Cement. Now, these cost optimization efforts contribute to improved EBITDA margins and overall net profit growth. And lastly, there's the surge in demand. Q2 sales volume indicated a big uptick in real estate and infra demand. Ramco Cements had the highest sales volume growth at 37% year-on-year, followed by ACC and JK Cement at 17% and 22% respectively. Now, for Q3, Motilal Oswal predicts a 6 to 7% industry demand growth. While November experienced a dip due to the festive season, which was affected due to the stop in construction and lack of labor, which drags down demand, December is anticipated to see strong demand on the back of infrastructure, commercial capex, and a rebound in demand from the individual housing and rural segments. Now, these favorable factors are set the stage for a substantial margin expansion scenario for the cement companies. Over the past year, all the major firms have witnessed very healthy EBITDA margin expansion. Now, in Q3 FY23 itself, there was a 1% uptick in cement prices and a 2% drop in crude prices. And all the firms except JK Cement achieved a triple-digit basis point margin expansion.